from Hewlett Packard. That could set the tone for tomorrow's trade. I'll see you tomorrow. Here's Marie.
Broadcast always takes my bell. Want to welcome everyone to Global Markets Radio Daily Recap. I'm your host, Andrew Spanton. Wednesday. Wild Wednesday. August 22nd, 2012, 4 p.m. Eastern. Happy birthday, Mom. What a day. Yeah, you see, I got, come on. What a day. Oh, my goodness, what a day. You're looking at the S&P 500 chart hourly, and you see the Fibonacci retracement here. And with all the hoopla, because obviously the big story of the day was the FOMC, Federal Open Market Committee, minutes, basically saying, open the spigots. Now. Wow. Wow. Wowie. Just amazing to me that given the economic numbers have not been so bad in the United States, given the housing situation has gotten better, though today's number was a little bit on the weak side, not much, 4.47 million on existing home sales. What's with all the panic? What's with the panic? I don't get it. But they certainly are in panic. Maybe they know something we don't. But given that, and remember, the theme has been QE, stocks to the moon. Right? So given that, why don't we at least make a run for the golden retracement? Could be a suck you in type play where the market, is selling into it, but then we look at the daily. On the S&P. And we get my propeller pattern. Shooting star, doji, hammer. Not really a hammer because we don't have any fatness to the candle, but still a doji. Relatively bullish. And now the question is, do we make a run for the highs? Do we make a run? Do we take out today's high and launch? Well, I think we got some China numbers coming out tonight that certainly could do something. HSBC manufacturing number, PMI, last month was 49.3, under 50. I don't think the market will. The S&P, in particular, the market will like that. But then, of course, we got QE forever in September. What a joke. And, of course, we saw gold explode on that. Broken out. Oh, mama. Heading to the major channel. This gold does look good. And the wedge, obviously, intact. But I want to see gold get through this channel. I think still gold could be a nice reversal day tomorrow. I think it could definitely reverse tomorrow. Manjana. But it is a nice breakout. It does look good. You don't want to fight this per se. Obviously, if it reverses and goes negative, that would be a good sign. Canadian numbers were terrible. Retail sales were terrible. Japan trade balance. Terrible. Really bad. But Dalian didn't really make its move until bond market collapsed. Bond yields melting. And Dalian went with it. No QE. Dalian explodes. When the Fed is done, when the Fed is finally done, that is your go sign to buy the crap out of Dalian. Until the Fed is done. And that sounds like end of 2014. Dalian ain't going nowhere. As long as bond yields continue to grind lower, we did have that recent pop. That's why we had Dalian make a move. Bond yields swayed down a little bit the last couple of days, and boom. But Dalian is very, no QE explodes. QE collapses. And that's the trade. Mas importante. Dollar Canada. Nice little reversal. Almost got to that 99.50 level. I'll tell you, it looks now good like a short, even though we did have that terrible number. Retail sales down 0.4%. headline, core. Leading index in Australia falling, but again, tonight's number is going to be important for Australia. And the key is going to be 105.30. Take out this 105.30 to the moon, Alice. Gone, like the wind. That'll be very impressive. And if we take out 105.40. But once again, given that bullish QE, given the minutes, you would have thought the Aussie could have had a monster outside candle close above 105.25. It didn't. Again, I'm curious about this HSBC manufacturing PMI, big time, leading index also. That's at 10:30 p.m. Eastern, manufacturing PMI. Leading index at 10 p.m. Eastern. We do get a litany of European data finally. Services, manufacturing PMI out of France, Germany, Eurozone. Realized sales out of London, CBI, as well as mortgage approvals. Pound, dollar, looks awesome. It was looking like a nice reversal candle, but again, more printing of money. More printing of money. And, you know, the amazing part about this whole situation is the more printing of money has led to increased corporate profits, has led to a widening of the class divide in the United States. The haves and the have-nots. The haves have gotten richer. Have-nots continue to be on government-assisted programs. Unbelievable. How is this something that works? I mean, it's almost like Bernanke is doing the trickle-down economics deal. You know? Ronald Reagan. I'll tell you, look at this cable, though. It is gone. This thing looks awesome. Euro, also, we'll get to that in a second. Looks good. Big spot, that 159. The golden retracement. We make it through there. Next stop. 160, 150. Oh, mama. But certainly looks good. I was not impressed with this rally, which makes me still more on the bearish side. I still think, unless they close them above 14.25.6, I still think this S&P is a short. But again, we should be higher. We should be higher. And I think that what could be, you know, this China number certainly could put a kibosh, at least in the morning. But again, if you would have told me that the Fed would have been that dovish, I would have thought the market should have been flying. The Dow was down in the day. Down. 30 points. NASDAQ was up. Apple, of course, to the moon. Up 13. What a joke. But this sterling does look good. Does look good. Dollar index. Let's go to the euro. Can't leave you hanging. Gone. Like the wind. Actually made money on the long side. Oh, baby. Let me tell you, this baby really could have smooth sailing into this channel line. It's not even that much. 126.50. So again, if you have any questions about any aspect of my business, feel free to email me, info@globalfxllc.com. Hang on. And, of course, follow me on Facebook, Voice of Forex fan page, as well as Twitter. Come on, keep following me on Twitter, people. Share my videos. Retweet them. Come on. But, again, you look at this euro dollar. It looks like we're going up. Dollar index breaking down at that 81.50 level. Big spot. Another one where we do this Fibonacci. And we take out this level here, 81.40. We go right down. Support here. It's about 80.68, something like that. Oh, boy. Not very good. So this dollar index certainly rolling over. Certainly looks like it's going to be weaker. Again, I think we're getting to the end of August where volatility is coming back. We saw that with the melt up in the S&P the other day and the reversal. And now today we came back, getting some decent volatility. Liking it. You would have thought, pound Aussie. Risk off. This thing should have been down. Except it broke out. Hopefully you bought that. Oh, baby. Got up to almost 51.50. Missed my target by 5 pips. Son of a bitch. But again, looks very good. Pound Kiwi. Another one. Gave it to you. Breaking out above 195. I'm a little nervous, though. With gold breaking out, I'm a little nervous on these trades. I think dollar shorts look good, but you know what? With gold breaking out, commodity currencies, you would think, would be the one to launch. So I think this, I'm more bullish on commodity currencies. I got to tell you, I think we could really have some sort of melt up. But the only way that would happen is if the S&Ps did take out the Fibonacci retracement. And then maybe. Dollar Swiss continues to break lower. Looks like 95.50 easy. Remember, people, I have a free 1-week trial. Email me, info@globalfxllc.com to sign up. What are you waiting for? Did you lose money today in those FOMC minutes? Hope not. Join the team. Try my product. All the yens reversed nicely. Look at that break. Just doesn't feel like a risk-on day. If anything, it was risk-off. Dollar yen, I think, goes lower, but probably should find a bottom. I think that this channel line here, should we break this? Oh, boy. Look out below. We take out 78. It's going to get ugly, very ugly, and we're probably looking around that 76.50 level. I'm sorry, 77. Fast. And bond yields continue to melt, courtesy of Burnurassoff. Hey, I'm telling you, history is not going to look well upon this man. Like I said, you can't. What this has done, again, it's allowed corporations to make more profits. It's allowed the haves to have more and the have-nots to be more government dependency. Government's going to more debt, helping fund that. And corporations continue to build up cash. What is that cash going to be used for? Well, I got to tell you, after 2008 and 9 and the flash crash and the funding issues, if I was a corporation, I would never forget that, and I would always want to keep cash on my balance sheet. Always. Can't rely on the money markets. Overnight lending just could freeze up again on you. So look at this Euro Canada. Continues to go up. Looks very good. This Euro Canada looks gorgeous. So hopefully you listened to some of my trade recs and you did well last night. Again, yes, there was a reversal. But again, sometimes you got to think for yourself a little bit, people. More QE in September. Get out of the way and get long. All right, everyone. Well, again, feel free to email me at info@globalfxllc.com for any questions. And again, back to this S&P. Big day tomorrow. What's it going to be? What's it going to be? Excuse me. Is it going to be to the moon? Which I could see. Or is China number going to be terrible? European number is going to be terrible. And futures never take out that high and we just roll over. As I say, momento de juego. But it just can't be that easy to fix the problem. Just print more money, print more money, print more money, buy more bonds, buy. And just keep up. I mean, what happens when they're gone? What if the patient never gets better? What if you just keep them on life support and wasting electricity, wasting money? Andrew Spanton, Global Markets Radio, the only voice you'll ever need. Truly loves to make you money. Oh, baby. Have a good night.